So the most important points to take away in yesterday's session was that no matter what may happen, there may be a number of reasons for the market to rise, there may be a number of reasons for the markets to fall. But this cycle is nothing but an inflation cycle. This cycle is nothing but a cycle of economic saturation. So it runs on autopilot. There will be a number of events which will come during the course. The market is going to react, but then it is going to get back to the normal, like how the pattern shows up. In a broader picture, when you see micro picture, if you see, there will be a lot of waves inside. Let me open the chart. If you look at in the micro picture, there will be lot of waves inside. But when you look it from far away, the broader pictures, you are going to find like this pattern coming time and again. This is a natural cycle of the stock market. In fact, every asset class. It happens even in real estate. You must have seen in real estate, the movement will be very slow, very slow, very slow, very slow. There will be little bit of slowdown, no buyers and all. Suddenly there will be a big boom. Prices will shoot up by 3 times, 5 times, 10 times. Then there will be a massive crash. No one would be ready to buy the property. You will have to quote a very discounted price in order to get the buy. Then again there will be a slight rise. Take an example of Shamshabad. When Shamshabad airport was announced, the price shot up like anything. Then what happened? It crashed badly because of the 111 rule, 111 geo rule. Then what happened? Again it is slightly climbing. Then again a real estate boom will come. I'll tell you when it is going to come. Then again there will be a shot up in the price. Not just Shamshabad, global real estate boom would come. Wherever you may have property, the prices are going to increase. The question is whether it increases to 1x or 2x or 5x or 10x depending upon which location you have chosen the property. Again then there will be a crash. So timely entry and exit in various asset classes is very important if you want your money to compound by a massive percentage. So the training is not only going to be useful to you only from the equity market perspective, but even mutual fund, even real estate, gold, silver, bonds, crypto, everything is going to be known through this cycle when we have to enter, when we have to exit. I'll provide you that entire table. Things would look very, very simple. Once you just follow the table, there will be entry and exit for various sectors. But within that sector, let's say that I tell you this time you have to enter cement, this time you have to exit cement. Now, while entering cement, which are the good stocks? For that, we will be doing fundamental and technical analysis. But first, most important thing is, while your approach, it has to be always top-down approach towards the market. What is the meaning of top-down approach? Note it down. Like this, systematically if you invest, you are going to be in that elite class who are making maximum returns from the market. Maybe their wealth is very high, your wealth may be low, but percentage wise, you may be in that elite 1% people who make exceptional income in market. Always follow top-down approach in stock market. Meaning, firstly, see the market cycle and know if we are timing it right. Meaning, if the market itself is somewhere here or somewhere here or somewhere here, somewhere here, there's no need to do any analysis. Because question is, the market cycle is saying that we shouldn't be in the market, then why should we do fundamental technical analysis? Why should we be buying equity mutual funds? There's no need to do any research. The research should be done for some other asset class which I'll be talking about. But first thing is, we have to be at a very interesting point in this cycle. I told you that you're lucky enough that you are somewhere out here, all this dull phase of the market. In the last 10 years, let us see how much market has given. 2012, approximately 6,000. In the last 10 years, market hasn't given you even 3x returns. Generally in 10 years, market rises by 5 times minimum. It grows at minimum 15% CAGR. So going forward, to achieve that average figure, the next 5 years has to be amazingly well, then only that average 15% CAGR would be met. So market hasn't given you an amazing return so far. 10 years has been dull. So now is the time that it has to cover up that underperformance. So this phase in the last 10 years is nothing but this dull period. Though it has risen, but not to an extent that we have thought of. The market bottom is already made, guys. That was the COVID time, so do not expect that you are going to get back the levels what you have seen during COVID. That's already over. That was an opportunity. Those who missed it has missed it. Nevertheless, even if you are out here, back if you see, you may look like we are late because already 3 times the index has risen. But going forward, if you see, there is another 3x yet to happen, and this is going to be a very short time compared to this time. If this is 10 years, this will be 3 years. If this is 15 years, this will be 5 years. So the time is very short and the growth is exponential, which is expected in the near future. So firstly, look at the market cycle. If market cycle is signaling us that, yes, the timing is right, you are at the very good inflection point, then we look into sector analysis. Now that we know that we have to buy in the market, which sectors we have to invest, that you have to check. This has to be the approach. Firstly, we see the market cycle, then we see the sectors, which sectors we should be investing. There are at least 20 sectors, but we will not be buying more than 10 sectors at any point of time. And then within that sectors, which are the quality stocks. Now within cement, I have 20 big names. Ultratech Cement, ACC Cement, Ambuja Cement, Kirti Industries, then India Cements. Find out which one is the most suitable one according to their performance. So firstly, sector must be checked, which sectors are likely to benefit from the current economic conditions, and then we'll see which stocks are going to get maximum benefit out of these conditions, and those stocks we ride on till the exit time comes. So when you see that selected sectors are showing buy signal, but the market cycle is giving a sell signal, we do not buy. We want all the three to be on the buy mode. What is that? Market cycle should say buy, sectors must say buy, selected stocks must say buy. Out of these three, if any one is also giving us a sell signal, we do not enter into that stock. Hope the point is clear. Now moving on with the market cycle. So yesterday we had discussed about the pessimism phase and understood that during this phase, these two sectors perform the best. So whenever the market crash is already over, if the crash is already over, then the time to enter the market has come. But then to enter also, these two are the sectors where you should be having maximum number of stocks. And then we'll see which stocks are going to be good among this sector once we come into fundamentals and technicals. We have seen that the bank's NPS rise, the P ratio may look cheap, but it is going to get cheaper, and especially the metals, the commodities, mining companies stay away, banks totally stay away. The worst news of them is going to come even though markets have already crashed. Remember again, market will signal first, news will come later. Markets have crashed, but maybe for a year, these companies may continue to post fantastic numbers. But you give another 1 year of time, you will see that the results are going pathetic. I told you companies like big companies like Tata Steel, JSW Steel, running into huge losses. Oil companies like ONGC running into huge losses. This is the thing that you're going to observe. Continuation of pessimism phase. The market consolidates and begins to take a U-turn at the peak of the bad news. Very, very important point here. Time to enter the stock market post crash. Okay, very important point, note it down. Post market crash, you will see markets reacting negatively for every bad news that follow, which goes on for several months or quarter. However, all of a sudden, you will find markets reacting positively. So post market crash, I told you series of bad news will follow. It will come from banks front, it will come from various countries front. Some small countries will get defaulted. Then maybe there'll be a deflation, the current account deficit, dollar rising. There will be a number of reasons. Aftermath of the market crash, n number of bad news can be expected. Some major bank globally or maybe locally will get collapsed. Some big company fraud may come out. Like say we have seen PNB bank fraud and all. So market will collapse like anything. So every bad news comes, market falls. Bad news comes, market falls. Bad news comes, market falls. Then a time will come. Bad news, market rises. That is the time, my friend, you got to enter into the market. We have seen the bottom. I'll give you an example of COVID itself. When COVID had come, first of all, it was only in China. Market was not reacting at all. We were having our own economy doing well. We thought that it will be only confined to China and that the temperatures in India, the COVID may not survive. So India is in a better place. So for 1-2 months, there was no reaction at all in the market. But then suddenly we have seen that the cases are rising. Though it is summer, but yet cases are rising. People are dying. There's shortage of oxygen. Hospitals getting filled. The market started falling. It continuously fell as and how the number of cases came out. Continuously fell as and how the number of cases came out. Then suddenly at evening, When the clock strikes 7, Modi came and announced that we are staking our economy for the life of the people. Jaan hai to jahan hai. Meaning, if there is life, people will survive. Let us put economy on backstop. He was ready to compromise. Openly, he said that economy is going to take a big hit into the stock market. I am announcing the lockdown. Unprecedented. Surprisingly, next day market opened 3% higher. And you observe the chart. I've already given you the homework. I don't know if you have done it. That was the bottom for the market. The day Modi announced that we are announcing lockdown, surprisingly, market reacted positively and we never got that level till date. That was the last opportunity to enter. And you know what happened? 80% public exited that day. Those are short-term traders. And most of the people during COVID time only they exited. They were all waiting for the good time to come, like vaccine will come. Arey, market knows all this in advance. You need to think rationally. You have to think in an other way, other side of the coin. What do you have to think? Arey, all the bad news came now. What is left now? Modi is announcing that there is lockdown. Now what else can happen? This is the worst which can happen. And I told you market is always in advance. That means the worst of the worst bad news came and that got factored in into the market. That is why the bottom was made. This is the maturity thinking. This you will learn only after 4-5 bad news which will take 20-25 years. Now that I am already giving it you right away. That is why knowledge in stock market is very important. The fees what you are paying is not expenditure, it is investment. This will help you to save your money. This will help you to compound your money better. So I always say, any money that you are paying for the stock market trading, if you are going with the quality person, it is not an fees, it is not an expenditure, it is an asset, it is an investment. Not now, you'll realize it when you are growing your 1 lakh to 3 lakh, 3 lakh to 10 lakh, 10 lakh to 30 lakh. That time you'll realize the value of this training. Your investment may be small at initial stages, but that when keep on compounding, I've already shown you how the graph grows. And let me tell you, 30% is the benchmark. We can make much higher than that. Just have the discipline in the system. Don't get overexcited when you get good returns. Don't get nervous for any year if may get bad. 30% is the average returns what we are targeting. We are likely to hit much higher than that. Now, getting back, so that's what is explained here. The market consolidates and begins to take a U-turn at the peak of the bad news. So the worst news comes, don't get panic here. But think like that, are worst to ho gaya, now what is left? Whatever the worst had to happen, it has happened. What else is left? Now, Modi announcing lockdown, that is the worst for any country, right? What else bad can happen now? That was only the worst. The Nifty P ratio should be nearly 10 to 12 points away from the peak. I'll talk about P ratio in the fundamental analysis. And at least 2 to 3 years must have passed by since the crash. This is also important. Because post market crash, it takes 2 to 3 years for the market to settle down and to discount all the bad news. So give some time to it. Let all the bad news one by one get discounted. Then you see in the long term chart that, sir, it has already happened 2 years. Every time I've seen in these 2 years that market falls on bad news, market falls on bad news. All of a sudden I'm seeing something different, sir. What is that I'm seeing? Market is rising, but the news is bad. Put all your money into the market. Your money would have been parked into gold, silver, real estate. I don't know. That chart I'll be giving you. We sell that, we buy this. Before market crash, we sell here, we buy there. That is how we are juggling our money. To make that superlative returns, we'll have to juggle the money in a proper way. So When you find market reacting irrationally to the worst news relevant to the economy, the bottom is made. The worst is likely to be over. This is the point where you'll find all the bad news are getting factored inside the market. Time to enter the market as the flight is ready to take off. The market rises slightly with higher tops and higher bottoms even on bad news. Now on, what will happen is, like even in COVID time it happened. Though the lockdown was announced, Nifty was somewhere around 8,000, the market bottom was made. After that also negative news will follow. But market will not react. अरे बहुत हो गया यार. 2 years I have been struggling with that negative news. I reacted. Now I am going to play a different game. Every time a bad news will come, market will digest. Every time a bad news will come, market will digest. Do not worry henceforth with any bad news. Market is not going to react to it. Market has already reacted 2 years back. So market rises slightly with higher tops and higher bottoms even on bad news. In the ending phase of pessimism, when you find the stock market falls, crashes significantly, you may still find some stocks showing strength, are near to touching 52-week high. Buy them as they are going to lead the market in the next bull phase and continue to hold them for 3 to 4 years. It is because during the time of panic, when most of the investors are already in a paper loss, find it difficult to book loss and shift to expensive stocks. So only few people can follow this, but eventually turn out to be winners in the near term. So book the loss in holding and with guts enter the stocks hitting high or are near high, especially when you find multiple stocks from the same sector doing it, then the sector itself has the caliber to perform well and the stocks within it has the high conviction to perform the best. So what this point is that this thing you have known, time to enter the market. Now you need to know which stocks you have to buy, which sector you have to target. So when you go into Google and you type stocks hitting 52-week high, that means stocks which are already trading at 1 year high, you will see one common pattern in them. At least there will be multiple stocks or a group of stocks from the same sector. So when you find that in those sectors, the stocks which look expensive, which are already hitting high, that is what you need to buy and forget it for 3-4 years. The real return will come here. If the money has to multiply, it will get multiplied here for the next 3-4 years. That is which phase? This phase. Though the market may be dull, but your stocks will be performing better. This phase. So here the market may give only 8 to 10% return, but the stocks what you have chosen with the criteria that I told you, they may perform with 3x times. Market rises by 10%, your stocks minimum 30%. So that is how you need to be always outperforming the market. Alright? So that is where the pessimism ends. The time where you see the market reacting irrationally or negative news, it is reacting positively, the phase gets over and we welcome the next phase, that is the skepticism phase. There is a rally in the long term chart, 3-5 years ending bear market. Skepticism meaning is doubtful. Pessimism meaning is like bad phase, something bad news and all. So in skepticism, good news will be there, bad news will be there. In pessimism, only bad news will be there. In skepticism, there will be good news as well as bad news. So people will doubt whether the economy is going to come back on track or it is only going to deteriorate further. Like that questions will keep on coming in your mind. But I told you, strictly follow the patterns of the chart. Do not hear anybody, do not listen to any news channel, do not read paper. Because the problem with the news channel paper is they are talking about today. They are not talking about what is likely to happen after 6 months. But market price is always what is likely to happen after 6 months. Market price is not what is happening today. It is little advanced. So if there is anybody who is talking about the future outlook, that channel you can watch. If there is any paper which is going to talk about what may likely happen after 6 months, that you can definitely read and take decisions also on that. But never. Example, I told you a company, right? Remember this company TRIL. Told you you have to hold it for 2 to 3 years because no one knows. People will know, the channel will know, the newspaper will know in the next 6 months that this is the company which is getting maximum benefit because of Ukraine and Russia crisis. Already, what you get in bank, you would have got in a single day had you invested in this company yesterday itself. See here, already in the last 5 days, the price is up by 4%. Yesterday itself, it is up by 5%. Though market was down, index was down yesterday. 74 points, but yet our stock performed better. Like this only you have to get outperformance. This is the only way to be in that elite class. This will still go a long way. Not time to sell. Alright, let us continue with the next phase now. There is a rally in the long term chart, 3 to 5 years ending bear market. The skepticism phase begins with 1 to 2 sharp 10% falls, followed by sharp V-shaped recoveries. And during the entire phase, several such 5 to 10% sharp dips and sharp recoveries can be seen. So far, you have seen that market falls, it takes a lot of time to rise. Market falls, it takes a lot of time to rise. But when it has entered into this phase, the bulls get the strength. The market has got that strength. That every time it falls, equally sharper it rises. V shape kind of patterns will find. Not that market doesn't fall. I told you waves will be there. It is not going to be a smooth ride. It will try everything to shake you out. It's only your conviction and your confidence and your experience which will compel you to stay into the market. So every time you see that the market is falling, don't get panic. Give some time. Rise will also be sharper. That is the nature of the market during this phase. Lot of sudden dips are seen that last for few days, and so the recovery, all this is to make the people fearful and remind of the recent market crash and to cut down the leverage position, but buying on every major dip is the strategy to be applied here. Market has now become buy on dips. Every fear, buy the fear. In the start of this phase, the commodities like coal, crude, iron ore, etc. have not yet risen and remain low, so the inflation, so that the raw material cost is less and the companies have better profit margin, so does the consumer spending power rises. A preparation for a bull phase to come, get ready. So in skepticism phase, you will see that there will not be inflation. An example, milk prices today, pure milk are anywhere between 80, 90, 100. Let's take a benchmark as 80 rupees a liter. Be prepared that this 80 rupees will become 82 rupees, 84 rupees, 86 rupees, 90 rupees. Because inflation and market cycle have got a lagging period of 6 months. More or less both go in tandem. More inflation, more growth in the stock market. More inflation, more growth even in the real estate. So you will see that the price of milk may rise, which is 80 rupees benchmark, will go to 90, 95 or even maybe 100. 100 rupees milk packet will become 120, 80 rupees will become 100, 60 may become 70, 75 like that. That is what you can expect in the next 3 years. Along with the market rise, inflation will also rise. But then, let's say 80 rupees has become 100 rupees a liter. For 10 years, that 100 may become 110. That's all. Inflation will be very low. So I'm giving an example of milk. It happens for every commodity. The construction cost of the house may be right now 1600 rupees an SFT. May go to 700, 1700, 1800, 2000. In next 3 years only this may happen. Then from 2000 it will not go to even 2200 in the next 10 years. Inflation will be very, very low. Sometimes for some commodities it will be negative. Cement prices and all that would fall down or the price would remain the same. Institutional investors, mutual funds and insurance company, they are called as institutional investors. So DII, domestic institutional investors or institutional investors, are nothing but The mutual fund guys, the insurance companies, as well as some corporate companies, like say TCS, Infosys, they also invest in their firm name into stocks. Maybe some other small IT companies and all. They're all called as institutions. They start to pour money in this phase. Liquidity is increasing slightly. So you'll see that the turnover in the stock market is increasing, the liquidity is increasing, all because of the buying support from the domestic institutional players. Stock market continues to rise on even with high valuation. This time if you check the valuation of the index, it may look expensive, but don't worry, in this phase it is going to be like this. You still have to remain invested. People are fearful to enter the market. Those specially average experienced people, stock market experts and analysts who have been badly hit by the market crash are talking about correction in this phase. If you open television channel, people will make you fearful, saying that don't you remember the crash what we had in the market? The worst is yet to come. Even after 2 years of crash, they'll say this story. Because maybe some bad news and all would come. But then market is not going to react. Market will digest. Market climbs wall of worries. There might be a minor crash in the market, 20 to 30% after the recent big rally, misguiding the experts and the analysts that the best is over for the market. In fact, this crash is a base for the next phase to come. Buying on any such crashes is highly recommended in this phase. I can compare this point with the COVID, in this chart cycle, what you see here. This dip. After this dip only, we give the welcome message to the next phase. So once that this dip has come, there will be n number of reasons. This time it was COVID, next time it may be some other reason. But for sure, you are going to get a massive fall in the market. So that those people who have entered early, they have to be shaken out, right? So a minor crash may be there in the market of extent of 20 to 30% also. But that is again a last opportunity for you to enter the bus. Board the bus because we are going to fly higher. If you miss it, you will still be able to make money, but you'll have to buy expensive. Like honestly speaking, you have missed this chance. We had a 20, 30% fall during COVID. So those who missed it has missed it. But nevertheless, maybe you could not buy at Nifty 8,000. Today it is at 17,000. You have no choice but to buy now. Because even from here we are going to rise a lot. But next time maybe, during the next cycle, maybe after 15, 20 years, you will remember this point. Last time it was COVID, this time this is the reason. I should not miss this opportunity. Enter with full force. Media, TV, newspaper, websites all talk about correction in the market that can set any time and the market looks overvalued. In this phase, lot of shorters are trapped badly. Market climbs all the wall of worries. This market is buy on dips kind of market. I told you, be totally blind, totally deaf to any external news sources regarding the market. You only believe in yourself, that's all. Always understand, market does not discount the current news, it only discounts what may happen in the next 6 months. So market signal is stronger than the news. Whenever any news comes, if I want to know the intensity of that news, I always check the stock market. If the news comes out during the market hours. Example, we had a surgical strike, India and Pakistan. And lot of my relatives, friends and all were saying that it is a very good time, Sanjay, exit the market because it may lead to a big war. I opened all the television channels, everywhere it was like that. Once foreign, take out your money. Once foreign, take out your money. Don't take chance, don't take risk. First take out, later we can enter. Every analyst was saying the same thing. 6 business channels, everyone same story. Like I remember what happened for Vodafone Idea also. I did not sell even a single share because market was slowly ticking up. That news, worst of the worst news is coming out. There are air strikes, there's a surgical strike, yet the market is not reacting. I did not listen to anybody. Again, if you observe it, check, tally the dates with the market pattern, index pattern, somewhere there we had made a bottom, that level did not come. Then it came during COVID because that bad news. But before COVID, we did not get that level again. So bad news is actually a buying opportunity here. That's what is mentioned. So don't fear with the bad news. Take opportunity of that bad news. Liquidity flows in mutual funds. New demat accounts are slowly increasing. Brokers have started making money. Turnover at the exchanges is increasing. So people have slowly started now showing interest into the market. There is a kind of left out feeling among the average experienced investors. Now people are realizing, Arey, why did I exit the market? They are regretting their exit. But that is how the market is. Sometimes market falls in strong uptrend charts and sharp V-shaped recoveries can also be seen. At least 3 to 5 times 10 to 20% falls and sharp V-shaped recovery can be seen here. A big dip is always a buying opportunity. Major fall may come, minor fall may come, whatever fall may come, it is time to buy, not to fear with this fall. Remember the difference between fall and crash. A fall is where it rises again. A crash is where it takes lot of time to rise again. It may take quarters and years. But a fall, it happens in few days. A recovery happens in few days. At the end of skepticism phase, the fall reduces to 3 to 10% sharp falls that come in a jiffy every few months, and then again a strong V-shaped recovery can be seen. Every minor dip is a buying opportunity here. During this time, the company's earning cycles is about to begin with a new trajectory. So fall will come, V-shaped recovery will come. Fall will come, V-shaped recovery will come. So every minor dip it becomes a buying opportunity here. Before it was like you have to wait for a major dip, but this major falls once, twice, thrice it will come. Then the fall intensity will reduce. The cuts will reduce. So don't wait for a big fall. Even in a minor fall, enter it. Even in case you are late. The P ratio, like example, right now we are late. We have already passed the 10-20% fall. Now, if we are getting even a 10% fall, which I am expecting may happen before March, the next 3 months we may experience a 10% fall. What are you going to do with it? Remember this point. It is buy opportunity. If not at 17,500, at least if I am able to enter at 16,000 somewhere, that's still a good entry point by looking at the near future. The P ratio is very high, misguiding as though the market is expensive but the earnings are discounted of future. So don't look at the valuation of the market, it may look little expensive. But I told you, market outlook is for the next 6 months, for the next 1 year, 2 years, how it is going to happen. Market keeps climbing the wall of worries. Remain invested and be ready to face the volatility. Hold your positions and act deaf to media and public. Average on tips you are holding if you have cash. So some stock you bought it at say 150 rupees, it is available at 120, you have to buy more. 120 rupees stocks is available at 100, buy more. Do not fear with this fall. It is liquidity that is driving the market and not the fundamentals. So market may be rising not because of the good news of the economy flowing in or the companies posting good results. Market is rising because people are pumping money. Market is rising because mutual fund institutional investors are pumping money. The excitement is slowly getting back. In the ending phase of skepticism, you will find that the metal and commodity stocks like Tata Steel beginning with a rally till the stage of euphoria. Very, very valid point. Note it down. There's something called as old economy sector, new economy sectors. I'll get back to that point. So here the metals, banks, infra, commodities, these kind of sector stocks you need to choose. This is the best time to enter such sectors. And I'll show you with a proof that how these individual stocks perform from the respective sectors during various phases of the market. Let us have a view of it now itself. Old economy means roti, kapda, makan. Always understand, old economy means roti, kapda, makan. That means not new age companies. What are the new age companies here? IT, mainly IT. So IT and then your Zomato, Swiggy kind of business, anything what the young generation is using or something new what you have seen in the last 20, 30 years. That is all new economy stocks. Something like virtual business. But old economy, something like physical business, real estate, then cement. Because this used to exist even 400, 500 years back. And then banks. Banks were also there, but through private financing and all that. So banks is old economy. Then your cement is old economy. Metals is old economy. Infrastructure is old economy. New economy is IT, pharma. Then you have got virtual platforms. And then your telecom. These are all new economy stocks. Hope the point is clear. So firstly understand the difference between old economy and new economy. Now look at some of the stocks how they have performed. ACC Cement, when the phase had come. If I break this cycle into two phases, one is skepticism and pessimism on one side, other side is maturity and euphoria. So whenever there is maturity and euphoria phase, the stock like ACC Cement, every stock is like that. I'm just giving an example of ACC. All the cement stocks are performed in the same pattern. 20 times it rose. Then what happened? For the next 8 years, did not give any return. So mutual funds, now you understand the difference. Why investing self is better than mutual fund. Mutual funds will have to be forced to invest here because SEBI compliance says that every sector you must have stocks. Though they have made a superior money in the 8 years, next 8 years they know that they will not make good returns, still they have to remain invested. But what you can do, you can exit and you can buy during this phase new generation companies like IT company like TCS, Infosys. Then again, next 8 years, amazing return. Then it is a positive return, but compared to 8 years, this return is very small. It is like fixed deposit. So what can be expected in the next 8 years? So now that we have entered into the last two phases, that is maturity phase, going forward, the outlook for the cement companies is amazing. And similar is the chart for metal companies. Rises exponentially, then falls down. That's why I told you heavy losses can be expected post-market crash by big companies like even Tata Steel. Then again a massive return, then negative return, then a massive return, then again a negative return would come. Alright? Tata Power. Look at that. So they have 8 year cycle. All that I am going to put you in the tabular format. L&T, infrastructure company, Larsen and Toubro. We'll talk about T-bond cycle later. So here you will be able to see that if you are able to choose the right sector and the stocks, then only you make that alpha return. Alpha is nothing but excessive return compared to index. So to generate that massive alpha, these all set of rules is very, very important to be followed. So during the ending phase of skepticism, sectors like metal, banks, infra, commodities are likely to perform the best till the market top is seen. Now, in the later stages of this phase, the markets are likely rich valued as the P discounts the near future growth, anticipation, liquidity, especially of institutions, are driving the prices higher on the expectation of economic boom soon to come. when you look at the P ratio, nothing but it will tell you whether it is overvalued or undervalued. So that may look like overvalued, but still you have to remain invested, because I told you stock market is an future outlook price. So it knows what is going to happen in the next 6 months or a year. That is why the price is increasing before itself. See, Shamshabad airport price did not increase after the announcement. It started increasing before the announcement itself. Likely to come at this location. Those people who knew it, they already started buying, right? So market is also like that. It won't wait for the good results to come. It will first rise, then the results will follow. Do not believe the stocks trading cheaply. Do not ever buy the stocks which are trading at low PE multiple. Rather, remain invested or put your money into high PE stocks as the future growth is anticipated in advance. So here the stocks which are already trading cheaper, it means that their future outlook is not good. In this phase I am talking about. The stocks whose P ratio is higher, that means their outlook is also bright. At the ending of this phase, sectors like metal, oil perform the best as the demand is set to rise in the near future. So end of skepticism till the top of euphoria. All these mining stocks and metal stocks, infrastructure stocks, your real estate, housing, banks, all of them perform the best. So that is why the stocks that you would be buying now, I would be suggesting all the old economy stocks. Do not buy IT stocks. I've repeatedly told many of them, and I never recommended, if you observe in my recommendations, not even a single major IT company. In the last 2 years that I have recommended a lot of stocks, you will not be finding IT companies there. And now have a look at the charts of the IT companies. You have seen that the market is rising. Already I have shown you the index chart, right? Okay, rising beautifully. Let us have a look at the IT companies. The price from 4,000 has fallen down to 3160. It is down rather. Down massively from the top. Nearly 30% gone. Market up, stocks down. Again the problem with mutual fund. They are forced to invest. You go into TCS and look at shareholding pattern. Every mutual fund is having it. Every mutual fund. But my own analysis says that IT is a bad investment for the next 3-4 years at least. Till we see the market top, I am not going to invest even a penny into IT companies. All brand names, the newspapers will give a full page article, the television channel will speak for, go gaga for an half an hour, 1 hour, 2 hours, I don't know. But I am not going to touch this sector. Maybe they will rise, but not how much market is rising. Look at Wipro. 720 rupees price has become 384, almost 50% gone, knocked off. And you say, sir, market is all game. Your 1 lakh invested would have become 50,000, even though investing in one of the top companies in India. This is the magic of the market. This is the magic of the training. Just follow. I told you now, only your own conviction will help. That's all. You'll see a lot of your students, a lot of your friends and all may be buying into this stock. I've seen students who have opened their Demat account with me, and students who have got their Demat account transferred under me. They are having such kind of stocks. What should I say? I tell them sell that and buy this. Hey, sir, your company we never heard. These companies we know well. But what happened end of the day? Okay, at least you have heard ACC Cement, you have heard Ambuja Cement, you have heard DLF, you have heard about say ONGC, L&T. At least buy that. Why we are buying this one? They are also big companies. No, they want to buy IT only. I don't understand the logic. They want to buy pharma. Look at the best of the best pharma names. I told you the time to buy pharma stocks is not in this phase, but in the pessimism phase. Price had been to 720, now the price is 520. Imagine the discount.
sir, I have a small doubt.
Sure, look
Sir,
at it.
so whatever the companies that you are suggesting right now,
Huh.
so my question is like, can an individual like you or a company start a mutual fund?
For mutual fund, you need to have a corpus of 100 crore.
Okay,
That is why
that's
I'm
okay.
managing portfolio. You say that you have money, but you don't want to deal into buying, selling everything. I have to manage. I do that. That's what I've been doing. I'm managing some 68 clients' portfolios, students and my own clients.
Okay. So clients in the sense like,
Those who have opened
I
demat account
talking.
under me in IIFL,
Okay. So those have open accounts under you and in AIF.
in IIFL, India Infoline.
Yeah, exactly.
Huh.
So what is the total value you can share?
But see, I have started investing post COVID time when the index was like 16, 17,000. Almost like average returns have been 20% per annum till now, in 2 years.
Okay.
Because some of the clients have suggested, sir, 50% we want the large cap exposure and all that. So there's not
Okay.
complete liberty to buy small cap, but the small caps have performed better than the large cap.
Okay.
But the next 3, 4 years
Sure, sir.
looks to be that very good returns have to be made. But not even a single such stocks have been bought, which could have deteriorated the capital. Rather than making 20%, we would lose 20%. That did not happen. That's the thing.
Okay, sir. Thank you, sir.
Huh. So Glenmark, then you have other IT companies, say Tech Mahindra, 30% fall. The price had gone to 1800 also. 1800 to 1000 rupees means almost 40% fall. So they'll continue to struggle till we reach the end of pessimism phase. During end of pessimism, you may enter here, or during the middle of pessimism also you may enter. New generation stocks turn will come that time. So those who are buying now for 4 years, their returns are going to be very low. You are just jamming your money. You are not utilizing the opportunity of the market cycle that we are going to see the euphoric growth. That growth will not come here. It will come in old economy stocks. It's time to be there, not here. So how this timing and right stock selection and right sector selection would help you out to compound your money by a big margin and in a faster time. This is all the ingredients to make that superlative returns. Every point that we are talking about, every word matters here. See, your job is only one thing, switching. Your money is there in the market, but when you have to take out and put in the other place, when you have to again put in, from which stocks you have to juggle, from which sectors you have to juggle. This art you must know, this game you must know. Otherwise, we could put that money into business itself, right? Today, let's say I want to do a metal business. By looking at a market cycle, I know that the metal business is very good from now for the next 4 years. But after 4 years, can I shut down my business? No. Such a huge investment that I have done on the machinery, land, and all, I cannot sell it just like that. So, though I know that the next 4 years are not going to be good, yet I have to sit idle. My money is jammed there. But the beauty of the stock market is you are a investment partner in the company. You are not a working partner, you are not even stepping inside the company, yet you are a partner. Today I like metal, I buy metal. Tomorrow I like pharma, I buy pharma. Day after tomorrow I like IT, I buy IT. I am able to switch my business. That is how you will be able to grow wealth more than the people who are business tycoons also. Percentage wise. Their factory may be growing by 20%, you will grow by 30, 40, 50%. For 4 years, their factory may not give them even 10% return, but you will continue to make 30, 40, 50% return. That is the key to success. Time will come where your friends itself will be jealous of you. And this guy never works, but yet he is making a lot of money. That time will come. If you follow every point that I am telling. Alright, let's get back to the cycle. The inflation starts at the ending phase of this. The metals, oil, gas perform the best as the demand is set to rise in the near future. The inflation starts. So this again is an important point. When you should be buying the old economic stocks. Any minor fall that comes till March 2023, buy stocks like, I'm even giving you the stocks. Why am I recommending the stocks? You'll get to know. Buy stocks like NMDC, Ramco Cements, South Indian Bank, and then the middle chair here, Nalvasan. It is a metals company. And then PSU banks are also good, but I'll have to do like 3-4 companies which is the best out of it. SBI, Bank of India, Canara Bank, PNB. One PSU bank also we would hold, but that we'll see fundamentally which is stronger. So this point you have to keep in mind. Though we will be in touch through WhatsApp and you can always call me anytime. But when that fall comes, you have to remind me, sir, you have told about this. It's time to buy. Okay, PFC. Power Finance Corporation. These are the companies that you should be buying. There is more, but these are the stocks which has to be in your primary purchasing bucket list. Alright? And we are going to touch upon this point again when that fall comes. The inflation starts rising and equity NBFCs do very well in this initial few years of inflation. Problem is in the later years of inflation. So though the inflation is higher, but you'll still see that the market is rising. Initial stages of inflation is actually a boon to the market. The problem comes when the inflation goes beyond a limit. That happens in euphoria. Maturity, inflation increases moderately. Euphoria, it increases exponentially. That is how it happens. So the inflation starts rising, equity, NBFCs, they do really well for the initial few years. Problem is in the later years of inflation. First few years, at least for 5 years, inflation is good because the companies will increase the prices of their product. They'll make more money. But when it becomes too high, that it leads to an hyperinflation, it will devastate the economy badly. It will collapse the financial systems. That happens because of the T-bond cycle, which we'll be discussing later. Okay, so this ends your skepticism phase. Then we have the maturity and euphoria phase. Tomorrow we'll talk about this. So tomorrow, once we have completed with the market cycles, we will start with the fundamental analysis. We will see, now that we know which sectors we have to enter, which sectors we exit, when we have to be in the market, when we have to exit, which stocks to buy, that study will begin from tomorrow itself. That is all for today. Any questions, doubts, make use of the audio, make use of the chat window.
Yes, sir. Sir,